All right, today we're going to dig into an investment thesis about a company you've probably never heard of, Megatherm Induction. It's a small manufacturer over in India, but the analysis we're breaking down here claims it could be a massive hidden gem with some serious growth potential. So let's get into it and see what all the fuss is about. Right off the bat, the analysis we're looking at makes this incredibly bold claim. It calls Megatherm a high-conviction multibagger. And what that means, in plain English, is they believe this stock could multiply your investment several times over. That's a massive, massive claim for a little company, right? It just makes you wonder, what are they seeing that the rest of the market is missing? Okay, so the whole argument really hinges on this idea of an asymmetric opportunity. As you can see, it's basically a situation where the potential win is way bigger than the potential loss. And it's exactly that kind of setup that gets investors really, really excited. So this all boils down to the big question we're tackling today. I mean, how does this relatively unknown industrial company from Kolkata suddenly have people talking about 10x potential? Let's unpack the thinking here. First things first. To really get why anyone's excited, we've got to understand what Megatherm actually does. And it turns out they're in the business of building some serious hardware, the kind of stuff that's literally powering India's industrial growth and its big push into green energy. So at its core, Megatherm is a heavy engineering company. We're not talking about consumer gadgets here. Think of them more like the folks who supply the actual engine room of the entire economy. Yeah, and just to be clear, we are not talking about small nuts and bolts here. Just look at their core products. We're talking heavy-duty, absolutely mission-critical machinery, like induction furnaces that melt steel, and these giant power transformers. This is the kind of gear that a country's whole infrastructure is built on. Now, this is where things get really interesting, and where you start to see the company's credibility. I mean, for a smaller company, their client list is an absolute who's who of Indian industry. Tata Motors, Indian Railways, energy giants like Adani. You see, these big-name blue-chip companies, they don't mess around. The fact that they trust Megatherm speaks volumes. Okay, so we've established they have a solid business, great clients, but where's all this explosive growth supposed to come from? Well, the analysis we're breaking down points to three very specific catalysts. It actually calls them growth engines. So the whole growth story really comes down to this three-part strategy. First, they've built a massive new factory to really ramp up production. Second, they've got a key partnership to break into the American market. And third, they're making this smart move to control their own supply chain and improve their profits. Look, any one of these moves on its own would be a big deal, but all three happening at once, that creates a really powerful story for potential growth. Let's just quickly break down that third point. Backward integration. It sounds complicated, but it's pretty simple. It just means instead of buying key parts from other companies, you decide to make them in-house. For Megatherm, that means building their own huge transformer tanks and copper parts, which gives them way more control over their costs, their quality, and their timeline. All right, this brings us to the real financial core of this whole thesis. Because you have to ask, right? If the growth story is this good, why isn't everybody and their brother already invested? And the argument here is that the market just hasn't noticed yet. And the key idea here is something called information asymmetry. Basically, because Megatherm is a smaller company, it's just not on the radar for the big investment funds that really move the market. And the whole idea is that this creates a special window of opportunity, a chance to get in before the company gets discovered by the big players and the price potentially shoots up to reflect its real growth. Okay, let's put a number to this. The analysis brings up a key metric called the price-to-earnings ratio, or PE. You can kind of think of it like a price tag for a stock. It helps you see how expensive it is compared to the profits it's making. Megatherm's PE is sitting at 21.6. But here's the thing, that number by itself doesn't mean much. We need some context. So let's see how it stacks up against its competitors. And wow, this slide right here is where that undervalued argument really hits home. I mean, just look at that difference. Megatherm is trading at a valuation that's basically half of what its peers, like Asab India and Inox India, are. The question the analysis is basically asking is, hey, if Megatherm pulls off its growth plan, why on earth shouldn't it be valued somewhere up there with them? And the confidence that they can execute is backed up by a pretty big number. 469 crores. That's the size of their current order book. We're talking confirmed orders. That's 1.4 times their entire annual sales. It means they have a super clear view of the money coming in for the next year or so. But of course, no investment case is all sunshine and rainbows. You gotta look at the other side of the coin. And to its credit, the research is really clear that this isn't a sure thing. It points out some real potential hurdles. So this table does a great job of laying out those risks. The main worries, rated as moderate, are execution risk, can they actually pull all this off, and the crazy swings in the prices of raw materials. But what's interesting is that for each risk, the analysis also provides a counterargument. The huge order book acts as a buffer, and repeat business shows their clients trust them. And get this, their IPO was oversubscribed 132 times. That means for every one share available, 132 people wanted to buy it. That signals some seriously strong confidence from the market right out of the gate. So you take the growth drivers on one hand, the risks on the other. Where does that leave us? Where could this company actually end up? Well, the analysis wraps up by painting a picture of three very different possible futures. And this right here is where that whole asymmetric opportunity idea we talked about at the beginning becomes really clear. See, in the bear case, the worst case scenario where things go wrong, the projection is pretty flat, not a huge loss. But even in the middle of the road base case, we're looking at a potential 3 to 4 times upside. And then there's the bull case. If everything goes right, that's where they see that incredible 10x potential. You can see it right there. The potential gain just seems to dwarf the potential loss. And that brings us right back to where we started, to the core conclusion of the report. It really frames Megatherm as the small company that's punching way above its weight, with the potential for the kind of returns you'd expect from a huge, well-known stock. And it all comes down to that powerful mix of real growth drivers and a valuation that right now just seems too low. So in the end, what this analysis gives us is a really detailed roadmap for how a small, under-the-radar company could become a major player. And it leaves us with one heck of a question. Is this a true hidden gem just waiting to be discovered by the wider market? Or is the market's current caution actually justified? That's the puzzle at the heart of the whole Megatherm thesis.